In this video, you will learn how the rich use real estate to build wealth. Stop scrolling because this is where the real game is played. Not how much money you make, but how much you use assets to multiply. And real estate is one of the most powerful tools the wealthy use to stay rich, grow rich, and never run out of money. First, understand this clearly. The rich don't buy houses, they buy assets. A house you live in costs you money every month. Mortgage, taxes, maintenance, that is a liability. But a property that pays you every month is an asset. That is the first mindset shift. Poor people buy homes to live. Rich people buy properties to earn. Now let's break it down exactly how they do it. Strategy number one, leverage. This is the most powerful concept in real estate. The rich do not use only their own money. They use the bank's money. For example, instead of paying $1 million cash for one property, they might put 20% down, $200,000, and control the entire $1 million asset. That means they keep cash and still own big property. If the property increases in value by 5%, that is $50,000 gain on $200,000. That is leverage. That is how wealth accelerates. Strategy number two, cash flow. The rich focus on property that pay them every month. Rental income, apartment buildings, commercial spaces, short-term rentals. The goal is simple. Income must be higher than expenses. That creates positive cash flow, and cash flow becomes income without working. This is how they replace their salary. Strategy number three, appreciation. Real estate tends to increase in value over time. Not every year, not every market, but long-term property values rise. So while they are collecting rent every month, the property itself is also growing in value. That means they win twice: monthly income and long-term growth. Strategy number four, tax advantages. That is one of the biggest secrets. Real estate allows the rich to reduce tax legally. Depreciations, deductions, mortgage interest, expenses, all reduce taxable income. That means they keep more of their money, while employees pay high taxes on salary. Strategy number five. This is where it becomes powerful. When property increases in value, the rich refinance it. That means they take out equity as a cash without selling the property. So they get money tax-free in many cases and still keep the asset. Then they use that cash to buy more property. This is called BRRR. Buy, rehab, rent, refinance, and repeat. Strategy number six, scaling portfolios. The rich don't stop at one property. They build portfolios. 5 properties, 10 properties, 50 properties. Each property brings income. Over time, that becomes thousands, then tens of thousands per month. That is how they build the financial independence. Strategy number seven, partnerships. The rich don't always use their own money. They partner. One person brings capital, another brings expertise, another manage the property. This allows them to control larger deals without putting all their own money at risk. Smart partnership multiplies opportunity. Strategy number 8, commercial real estate. This is where the biggest money is. Office buildings, retail centers, large apartment complexes. These properties generate higher income and are valued based on income, not just market price. Strategy number 9, long-term thinking. The rich don't buy to flip it quickly most of the time. They buy and hold. 10 years, 20 years, the debt decreases and the property values increase. Over time, the asset becomes fully owned and generates pure profit. Strategy number 10, control and passions. Real estate is not fast money. It requires discipline, management, strategy. But once built, it becomes a system that produces income for life. Now, let's make it real. Imagine you buy $300,000 property with 10% down. That is $30,000 down. You're renting and make it $300 per month. Now, the property also increases in value by 4%. That's 12,000 in equity gain. So in 1 year alone, you made over $15,000 on a $30,000 investment. That is a 50% return. That is the power of leverage and real estate. Now, imagine you do this 5 times. Now you are making $1,500 per month in cash flow, plus appreciation, plus equity growth. That is our rich scale. Now, here's the biggest lesson. The rich don't work for money. They build systems that produce money. Real estate is one of those systems. So the question is not, can you afford real estate? The question is, can you afford to ignore it? Because the difference between average and wealthy is simple. One buys liabilities, the other buys asset. And if you want more content like this, money, real estate, and how to build the long-term wealth like the rich, subscribe now.